Okay, afternoon all. Hope you're all well. Hope you're ready for another lively day of packed earnings report calendar. We've already had, well, we had a couple last night after the closing bell. We've already had a couple of interest this morning. Let's just cover those to start with. Before I do that, let's just look at the sort of medium-term chart here. So this is October. The last sort of 3 or 4 weeks. So we're looking at the non-farm payrolls low down here on the 2nd of October, and obviously the uptrend that we've been in since then, and actually significantly, possibly, we've kind of broken out of the bottom side of this trend channel that I've been looking at for the last couple of weeks. So, you know, from on the medium term perspective, that's a slight sort of negative technical setup there, and we're looking maybe now at more of a ranging market, a sideways moving market, than previously we'd been trending higher. So, you know, the longer that we move sideways, obviously the more obvious the uptrend is beginning to lose its momentum. So that's one thing to be aware of on the medium term. If you're looking a little bit shorter in, I'm going to go to the 1 hour chart here. We're cutting this kind of obviously shows you the range that we've been in over the last few days, and the bottom side of that range was set on the 19th, and that's at 1076.25, and the top side of course is the high of the year at 1099. Okay, so overall that's the type of range we're looking at. We're currently not far off sort of mid-range, so I think there are two major support and resistance levels, you know, going into today's session. So on the downside 1076.25, and on the upside 1099. Okay, so that's my kind of major range for the day. Just zooming in on the 15-minute now to get a slightly better idea of the price action yesterday and what's happened so far today. So this chart showing you yesterday's action and then what's happened overnight and this morning. So let's just talk about let's talk about yesterday to start with. And basically we had overall we had a hell of a lot of fundamental news flow from the earnings reports and from economic data, and overall it was pretty mixed. Okay, we had some really good earnings out of Caterpillar in particular, and generally pretty good earnings. A couple of disappointments, Coca-Cola and DuPont didn't quite beat expectations, but so that was a slight downside, but the Caterpillar results really were the standout from yesterday morning. So overall the earnings reports yesterday morning, you'd put a positive kind of spin on that, and with Apple the night before, you know, that really did add to the positivity on the earnings report side. But we had some economic data which was worse than expected. So housing starts and building permits both quite a lot lower than expected, and we were talking yesterday about the fact that the tax breaks for first time buyers in the US, they currently get an $8,000 tax break if they're buying their first house, but that's coming to an end at the end of November. And we were talking about the fact that home builders may well be just reducing their activity, expecting a bit of a drop-off in first-time buying activity in the market. So I think that's why that occurred. The fact that they revised down the previous month's data did give the only positive spin on these set of numbers, and that was the fact that the continuing uptrend in the housing starts numbers was still in place. Okay, so the uptrend was still in place, albeit moving higher at a slower rate, but you know, the headline numbers were worse than expected, and that's why the market came off. So I'm just looking at the chart here after the earnings. So 130, really on the cash open we really started to find some downside momentum, and we really got quite a steep trending market lower, and we really broke down, especially at 4:30, where we moved through the lows from the day before, and we moved lower and set a new low at 1082. Okay, from there it was quite obvious. I mean, that move lower at 4:30 was all about the dollar, and the dollar began to strengthen significantly against the other currency pairs, you know, dollar euro in particular, and that kind of led stocks lower. It also led the oil price lower. Bonds were making new highs, so it was quite a sort of fundamental move based on the dollar really pushing new ground on the upside, and that's why we broke down and made new lows. When the dollar turned and stopped strengthening and bounced off its top and started to move lower, so did we. We bounced off the bottom and began to move higher, and it was quite obvious, well, in my mind, that we were going to hit this low and begin to trend back higher. I knew that's what the market wanted to do, but it wasn't an easy trading period because it was pretty messy, the price action, quite choppy at times. We had one big order of 8,000 contracts traded, one order which cleaned out quite a few prices, and I know it caught some people out. If you're long when a big sell order comes into the market unexpectedly, that's just bad luck. That's just one of those things. There's nothing you can do to guard against that other than having a good stop loss in place as usual. But it was quite a messy period after we'd hit that low yesterday afternoon, and it wasn't an easy trading day yesterday. Especially, and that's normally the case when we get mixed data. Okay, when we get good news and bad news, it's difficult to gauge how the market's going to digest that. It's hard to know how the market as a whole is going to look at it, and what significance is it going to give to the bad data, what significance is it going to give to the good data, and overall, where's direction. And yesterday direction was lower for a period, but it was the dollar strength that really pushed us to the lows. We retraced into the close up to around about 1088 area, and that's really where we ranged overnight. The after the bell earnings reports were from Yahoo and SanDisk. Both beat expectations. Yahoo in particular, they came in with 15 cents per share versus expected 12 cents. Revenue was better at 1.58 billion versus the 1.12 billion expected. They also raised their forecast for 2009 and 2010. So all good stuff from the earnings last night, and all good stuff from the earnings so far today. Eli Lilly, $1.20 on their earnings per share versus $1.01 expected. Revenue was better at 5.56 billion versus 5.398 billion, and they raised their forecasts. Altria, who are a big tobacco company out in the States, they're pretty punchy. They make up about nearly 4%, nearly 0.4% of the S&P 500, so they're a pretty big company. They just about beat on their earnings per share. They came in at 48 cents versus 47 expected, but their revenue number was sensational. Revenue came in at 6.3 billion. We'd only been expecting 4.6 billion, so huge revenue there. But obviously the fact they haven't translated that into a much better than expected earnings per share shows that potentially their streamlining during the recessionary period wasn't quite as effective as some of the other companies we're seeing. But still, revenue is what we want to see during this quarterly earnings season. We want to see better numbers on the sales side than expected, and that's certainly what Altria have produced there. So the earnings so far today have been better than expected. We've got plenty of other earnings to come. We're still waiting for Morgan Stanley. We've got Boeing, we've got Wells Fargo, US Bank Corp, and of course Exxon Mobil. The list goes on really, so we've got some huge earnings reports still to come today. Okay, possibly the best day, I would say, for earnings today. So Morgan Stanley and Wells Fargo obviously out of the financial sector, so following on from the financials earnings reports we got last week, which largely speaking were better than expected. So particularly Goldman Sachs and JP Morgan smashed expectations, but on the flip side Bank of America produced a very disappointing report, and it's really Bank of America so far that sticks out in as the worst report throughout this whole process to date. So Wells Fargo and Morgan Stanley further news on the financial side, then and of course US Bank Corp. Boeing then obviously out of the transportation sector, and Exxon Mobil, who are the biggest company by market cap in the world. Obviously they're an oil company, so some pretty huge significant earnings still to come, which is why the market's very quiet, even though we've had some reasonably important results already out of Eli Lilly and Altria. We're waiting for the big guns, and that's the Morgan Stanleys, the Wells Fargos, the Boeings, and the Exxon Mobils. So that's why